Good morning, traders, and welcome to this Elliott Wave webinar. I'm Juan Maldonado from the Elliott Wave Street, and it's a pleasure to be with you today. We are going to check some of the live markets, and also I'm going to show you some of the trades that I take last month because we can learn from them. I'm going to show you two trades, three trades, one that didn't work, and we can see the reasons, and one that worked on the forex market, and an S&P trade that I took this week. But let's start with some live market analysis, and then we cover some tips that I want to give you in order to use properly the Elliott wave theory. This is the Aussie. The Aussie dollar is in a bullish trend, and we have a corrective wave, a three-wave sequence. So today in the morning, I share with my clients this trade. I'm long Aussie. Let me show you the Telegram channel. Here, I bought today at 7:30 a.m. the Aussie between the 71.84. What I mean with this slash is that I give my clients a range where to trigger. I trigger at the lowest price because that's where the current price was at that moment, 71.84, and the stop loss at the 71.70. So on this trade, I'm long, and my target is the previous high. If it breakouts and if it gives us more to the upside, well, fantastic, right? But at least I'm looking to take some profits at this previous high based on this Elliott wave pattern. So that's one of the things that I want to talk about today, and is the right way to use the Elliott wave theory. Now, let's have a look at another trade that I just triggered, and it's on the dollar CAD. On the dollar CAD, I am short. Let me show you the entry, and then we check the analysis right here. So I filled my entry at the 132.85. The range was between the 85 and the 80, with a stop loss at the 133.08, so just above the high. So now let's have a look at the trade. So on the dollar CAD, in terms of Elliott, I'm looking for the wave 5 with a minimum risk, tiny risk. The target is here at the previous low, where I'm planning to take some profits, and I trigger my trade at the 80, 85. Let me double check. Yeah, at the 85. So let's add the line right there. We can have a better reference. 132.85. Yep, right there, I trigger my trade. Look, on the hourly chart, we are seeing, even in a star pattern, this three candle formation, plus we have the price trying to cross resistance, fails, and starts reversing. So there we go with our bearish flag. I trigger my trade. I leave my stop loss above the high, because if the price continues higher, it will tell that the wave 4 is active. That's possible, and I don't want to be in a trade where the wave 4 is active. What if the wave 4 starts doing something different? Right? It's possible. Those scenarios are possible. So always, as traders, we need to manage the risk. We need to be very careful with the risk, because that's key in order to be successful in the markets. Being with a strong mind in terms of the money management is key. Psychology, money management, good technical analysis. I recommend Elliott Wave, and of course, a good trading strategy. Those, for me, are the main things we need to master one by one in order to have good trades. And let's talk more about the Elliott wave theory. I want to give you some insights about this fantastic theory. With me, when you are my client, you don't need to be an expert on the Elliott wave theory in order to have the full potential of the theory, because I can do the tough part, I can do the complex part for you, and then you just enjoy the result. Here, let me show you something interesting about the Elliott wave theory so we are in the same page. This is an impulse. If you are completely new to the Elliott wave theory, if this is the first time you hear the name an impulse under the trading environment, under trading industry, let me explain. An impulse is a trending move. When we have an impulse, then we are looking for a retrace in order to buy and follow the trend. And we repeat this process. Now, let me tell you the common mistakes when you are learning Elliott wave theory and also when you are trading any system. Sometimes, when we are learning a system, we do it or we apply it on the wrong way. For example, if you are new to Elliott wave theory, or even if you have experience with it, it doesn't matter. Sometimes, when we learn the theory and we go to the charts, and no matter what market, no matter what time frame, and the price is right here, right, then we can have the price, if we are live in the market right there, right here, we are going to say, oh, I found an impulse, so I should sell. So let's take a sell trade right here, because that's an impulsive leg. So if that's the case, then you are going to have a 3-wave sequence, right? And you are going to make money, and you're going to say, oh, Elliott wave works, really nice, right? But what if the price continues higher here because it was doing an Elliott wave extension, and you take this sell trade right here when the market was there, and let's say that you make a huge mistake of not placing a stop loss, and you start losing a lot of money. What are you going to say? Oh, the Elliott wave theory is a scam. The Elliott wave theory doesn't work at all. It's a waste of time, right? So it depends on your experience, on those first trades, the opinion that you are going to have about the theory. Well, let me tell you that this is a huge mistake. You shouldn't sell the impulse. Never in your life. And this is going to be so helpful for your entire trading. When you find an impulse, never try to sell it, because I have some news for you. It could become extended like this. All right? So instead of having that mindset, what if you find the impulse like here, what if you start doing something different? What if you say, I'm going to buy after seeing a 3-wave sequence for the wave 2? Okay, so now we're making a point, because if you buy here and you buy here and you use the impulse to take profits, manage the trade, this is the right way to use the Elliott wave theory. This is the right way. So instead of selling at tops, buy at dips. Pretty basic, right? That's almost in all the trading books. But with Elliott wave, it's going to be more clear because we are going to identify, we're going to label those dips, right? Makes sense? So the next step is to go to the charts and start finding the patterns. That's it. So going back to my live trade here on the dollar cat, I'm finding the impulse. So we can say that we can sell here and we can sell here instead of buying here or buying here. That will be incorrect. This is the way to go. Sell here. Right? Makes sense. So some people try to use it in the other way, and trust me, it's a disaster. I was one of them. When I was starting to use the Elliott wave theory, I was thinking that was something like a magic formula, like the Holy Grail, that was going to tell me precisely where the market was going to turn around, that was going to show me precisely where to take my trades, and that's a huge mistake. So that's the first point. The second point is that some people think that because you think you are in the wave 4, or I think, or anyone, doesn't matter, that's going to happen. So some traders start using the Elliott wave theory by taking trades because you are in the wave 4. So let's say that I believe I'm in the wave 4, and because I am in the wave 4, I start selling, and the market then starts going up, and I think, okay, it's just a deeper wave 4, no problem there, I'm going to sell higher. And the price continues. Oh, it was a deeper wave 4, I'm going to sell it again. And you start selling because you think you are in the wave 4. And this is not the reason to take the trade. This is not the reason to take the trade. We need to add to this strategy. So I have my strategy, the Cyclone Revolution, in order to validate the trades. All right? So let's go back to the ingredients, to the things we need to have a successful trade. So item number 1, a strong mind. That means not chasing things, not doing crazy things, not using a stop loss, like all the basic mistakes. Item number 2, psychology. Psychology of the market. Item number 3, analysis. This is where I recommend Elliott wave. But if you have issues with the previous 2, you are not going to be successful because you are going to make mistakes. And 4th will be a strategy to manage, to trigger, to understand, to plan, to take it easy, and to make money on the longer term, not on an individual trade, right? Requires time, requires a strategy, the long-term strategy and everything. And the last item will be, of course, money management and trade management. If you are failing on one of these items, you are not going to be successful. You know what's the biggest issue after training thousands of traders during the last 10 years that I have been teaching how to trade? Is that everybody wants to focus on item number 4, a strategy. Okay, great, you know about trading, so tell me a candle pattern that I can trigger my trade. Please tell me exactly, precisely, where I need to trigger my trade. Tell me the hammer, it's that good. Should I buy hammers? Right? So a lot of people in this industry are completely obsessed of point number 4, a moving average crossover system, a candlestick pattern. Everybody wants the trigger, right? And of course, it's an important part, but they are leaving behind all these other items. So that's a big issue, So that's why I like to train my traders with all these things in order to make them professional. And that's the way it works. And I like to train my traders with the live markets. That's why I always share my trades. I'm going to show you a couple of examples of a trade that didn't work and 2 that worked. Because all of us, we always feel proud of our trades that worked. It's not usual to see on Twitter, on any social media, on an article about a trade that didn't work. Right? Because everyone says, oh, do you remember that trade that I took 2 weeks ago that I make 1,000 points? I have never seen on Twitter or Facebook or in any article someone saying, well, this trade didn't work and this is why it didn't work, right? But I like to show also my trades that didn't work. Of course, I feel proud of the ones that worked, but also I like to show and to teach the ones that didn't work. So let me share with you my trading record. I started to share my trade entries on 2017. Wow, 3 years ago. Time flies, right? Wow. But I have been sharing the live market analysis since 2011, 2012. And I started to share my trading strategies and train clients since 2010, 10 years ago. And I was trading some years before that. Wow, it's incredible. All right, so coming back here to the trades, I want to show you 2 trades. One that didn't work on July. This one. Oh no, this one. Oops, where you are, dollar cat. Oh, here you are. This one, the dollar cat. And I want to share one with you that worked. This one, the pound. And I also want to share with you a trade that I took on the S&P because I don't have the futures trade is kind of new. So I take this one this week, so I'm not mixing it with the Forex ones, but I'm building a trading record with the futures as well. As you can see, a lot of work here. All right, so let's start with the dollar cat. One of the best exercises I like to do here, when we are like checking what happened, is to check the report that I sent to my clients on that date. So let me show you. That was July the 7th. I sent my charts every day to my clients. So we are time traveling here. We are going to the past. Right? July the 7th. There we go. So now we are in the past. And let's suppose that you, that morning, start your trading session and you say, okay, I want to check what Juan is saying. I want to check his wave count. So you come here and you check the chart. Right? So my plan was to sell dollar cat because I was in the wave 2. Trend trade, makes sense, everything, right? So I place my sell stop order or my market order at the 135.75 and the stop loss at the 136, 25 pips of a stop. And also, I provide a daily video explaining the reason why I'm taking these trades. and all the strategy. So then we have here, let me go back here. That was that wave 2 that you were seeing on the report, right? And that's where I take my sell trade. And look what happened. The price, it started to move a little bit lower, didn't give me enough time to manage or to move the stop loss, and it went for me at the 136. Then it showed with my system, it's manually my system, another entry at this area, but this one I didn't take it because I was sleeping. It was a night. I see it the other day. Like when I wake up and I start doing my analysis, we were starting to break out this area, and I miss it. Well, that happens. But this rate didn't work, and when this happens, all you need to do is wait for the next one. That's it. Don't fight the market. If you think that this is the wave 2 as I was thinking, I take the trade, well, fails, goes to the stop. Oh, it's a shame. But the trader that is trading with emotions is going to start selling, and having a lot of losses. Don't do that. Wait for the next validation. And you're wondering, well, why is a validation here, not here? All those things, of course, I can't explain that in this short presentation. You can take my course if you really want to learn this strategy. But the thing is that don't use Elliott wave to trade. Use it as an analysis, as a market analysis. All right, and then look what happened here. Let's go back here to the wave count. Look where we are after the wave 2. Right? Look all this distance. So we can say that the wave count was right. This was the chart posted that date on the website for the members, right? The analysis was right. But the timing wasn't, because the wave 2 was going to be more complex. So even knowing the direction, that is the third point on our item list, that is the analysis that I recommend Elliott wave, right? Even knowing the direction, trading is tough, because then comes forth a strategy. And sometimes these kind of things can happen. All right? And now we are here on the live market. That's the short trade that I just take. So you can see with Elliott wave, we can plan in advance our trades. And that's wonderful, right? Let's have a trade. Let's have a look at the trade that worked, that I want to share with you. That is the pound. This was a good experience. This one here. So it was July the 23rd. Let's have a look here at that report quickly. July the 23rd. There we go. So again, we are going to the past. We are going to do the same exercise. And this is the daily report, the date, July the 23rd. So I was finding the end of a wave 2. That was my plan, finding the end of the wave 2. Don't forget the strategy. 1, 2, 3, 4, 5. We buy here, we buy here. Never in the life we're going to sell here. All right? So the plan was to buy here. So I post these charts, plus I post a daily video explaining what I'm doing, and also I post my trade to buy at the 127 with a stop loss at the 126.75. As you can see, my trades are with a small stop loss, always. Then let's have a look what happened with that trade. So we were here, finding the end of the wave 2 orange. It was a Thursday. Let me show you the report here. It was a Thursday, okay? That morning. That orange wave 2, 127, right there. So I trigger my trade, very nicely at the end of the wave 2, and the price started to go higher, right? And right here on the daily video, I said this is the first target, like similar to the trade that I just take on the Aussie Live here at the beginning of the webinar, right? The same thing. And it was Thursday night, and I was checking my charts before going to bed, and I said, oh, that thing is rejecting, so I'm taking my profits. That's it. Tomorrow is Friday. I don't want to keep my trade open during the weekend, like all the things that we think when we are conservative, as I am. I have clients that are so aggressive that they keep the trades for longer. Look what happened next. So I take 60 pips out of my trade. Wow, right? Even with a simple trend line, with this wave count, we could take profits here with a more aggressive point number 5, trade management. You see all the things we need to master to be good traders, to be professional traders? It's amazing, right? And that's why I like to teach how to trade, because I learn a lot. I enjoy doing this thing. For me, I couldn't be trading without teaching. I love every morning to do the daily videos, to share my trades, to be active with my students, with my clients. And then the price continued higher, but after these strong retrace, of course, wasn't a proper thing to do, to continue with the trade there. Let's talk about, now that we're here on the pound, let's talk about the actual analysis, and then I want to share a trade that I took this week on the S&P with you, because it's a very interesting trade. And then we can check how our trade on the Aussie and the CAD are going. And I don't know, I haven't checked the chart yet. Okay, so the pound and the euro are similar because they are at market tops. So now with this training that you have been behind on this webinar, that is changing your mind forever, is this a good level to buy? Is this a good level to sell? Of course not. It's a level to do nothing on the pound. Why? Because the impulse is going up, and we need to buy when the price moves down in a 3-wave sequence. Maybe here, I didn't take this trade. Or if as expected, maybe not, the price goes down, I will buy it here. All right? But never in my life I will try to sell the pound, because the trend is going up. Now, let's say that I give you this wave count and you start making crazy things. Oh, I want to sell because Juan is saying there is a wave X and that the price can go down or is likely to go lower, right? That's the first interpretation. So let's sell. No, it's a mistake. Don't do it. Wait for the retrace and buy. All right? Because here the price can continue higher easily, and we can be in the wave 5 green, and we already missed the trade if it was here. Right? So Elliott wave is going to give us all these details in order to understand the markets. Now, let me show you this trade that I share with my clients. The futures trades are kind of new. I bought on August the 4th the S&P at the 3283, on the ES was 3275, and the stop loss at the 3278. So let's do the same exercise. Let's go back to the past. That was this week, August the 4th. Now I have to go to the futures videos, futures charts. I also provide a daily futures video if you trade futures. Oh, August the 6th, no, August the 4th. This is the report from today, August the 4th. That was my entry. Yeah, August the 4th. Great. So we are here on the S&P. That morning, I said, well, traders, we have a 3-wave sequence down. So remember, always, we are buying once we have the retrace. We are not going to sell here. And I'm sorry to repeat this thing so many times, but trust me, sometimes I receive emails of clients or people that attend to my presentations saying that they are doing that thing of selling on tops. So that's why I like to repeat. And repetition is key. You know, our brains absorb and absorb when we repeat. That is why it's so important to read the books many times and all these study techniques. All right, so here I was finding my end of wave 2. It's like the same trade that I just showed you, the Aussie Life or the dollar cat. So I said, okay, I'm ready. My Cyclone Revolution is showing the validation. Everything is in place. So now let's share the trade with my clients. And I bought the S&P 3283, the index, or the ES. If you're familiar to these markets, it's a little bit lower, 3275. With a stop loss, 3278, 5 points of a stop. Why? Because I said, right here, I said that if the price continue moving lower, this wasn't the end of wave 2. So it was better to have a little loss rather than wait to see if the wave 2 was going to be deeper or not. Right? Cool. Let's see what happened next. Oh, the S&P, so great. Okay, so we were here, right, to recap the daily analysis, right? The wave 2 magenta. And here I took my buy trade 3283. My stop loss 3278 below the low. Right? And look at this beautiful move. I don't provide in the trade specifics, I don't provide with targets because I showed you in the video my plans, and also because with my service, I want you to become the best trader. So I have videos where I explain how to manage the trades, and as I showed you on the pound, maybe some other, maybe you will let the trade run more than I did, and that's where you start becoming a professional trader. Because I don't want you to be a copy of my analysis of my style. I want you to, with an open mind, to show you the power of Elliott wave in order to make you the best trader possible. But you need to have an open mind. You need to be flexible. You need to go through those 5 points of becoming a professional trader. Right? And look, this beautiful move. So this thing works fantastic. As you can see, before we go, let's have a look at our live trades. Let's see how they are going. Oh, great. The Aussie is coming higher. I bought the Aussie this morning. Let me show you. Right here. The Aussie, I bought the Aussie and I sold the dollar cat. So 71.84. And right now we're at the 72. We're booking 16 pips. And the target is 72.40 at least. There, I will take my profits. I think I'm so conservative. So conservative. Then maybe a couple of days later, we are going to be at the 73, and I will say, again. But I'm so conservative. I like to be that way. And the dollar cat. The dollar cat, where are you? Oh, here you are. Let's see how this one is going. Great. Working nicely. So I sold this one at 32.85, and the minimum target is the previous low, right? So both are working. Of course, not all the trades are going to work. Last month, I have from all my trades, 30% came to the stop loss. Some months I have 40%. I have been having months with 45% of losses from my trades. It's not stable, that number. It depends on the market. But all the months I have been positive because my strong mindset, because my money management. Right? So this technique is fantastic, traders. I really recommend that you add the Elliott wave theory to your trading. You can you can learn the whole Elliott wave theory with me if you like my style, if you like my way to teach, if you like a mentor that shows the live trades. You can take the course here on ElliottWaveStreet.com. Visit the education tab. So right there, you will find everything about my course. You can read this thing because I explain everything with an example and everything, how I trigger the trades. Or if you are not interested in learning the technique and you just want to see the output of the analysis, you can visit the membership and take your trial. We're offering currently some trials for the first month, then $75 per month, automatic recurring payments. You can cancel sending an email if you feel that this is not for you or something. Of course, just send me an email and we cancel the subscription. But make sure that you understand that it's recurring payments, And you can pick Forex, stocks, or the full access. Here you can find all the details on Elliott Wave Street. So thank you very much for being here. As always, it's a pleasure to share a little bit of my knowledge, a little bit of my live market analysis with you. Please have a fantastic trading week, a fantastic trading session. I wish you the best, and I'll see you soon. Take care. Bye-bye.